Hello and welcome to ASX Market Watch for the 19th of September 2009. This week we'll be looking at three charts. We'll be looking at my favourite, the ASX Top 200, which will give us an idea of which way we should be trading. You should not have had any trouble in the last couple of weeks. I hope you haven't anyway. It's been pretty clear which way the market has been heading, but we can also look at where we might be finding resistance in the future for you as well. The next one we're looking at is the Dow Jones, my second favourite index, which gives us a bit of an early indication as to if we might be getting a trend change in the future, because the All Ords and the Top 200 does follow the Dow Jones quite closely. And lastly, I've added a new one. It's the Seng, and I've just added it because it's close to Australia in the Asia Pacific region, and really it's sort of overlooked in the whole grand scheme of things, but it's actually more closely tied to Australia than most people think. The first chart I'll be looking at is the ASX Top 200. Now, all I've done every week, it's a very simple method that I use. It's trend lines. It's something that probably your son or daughter might be able to do quite easily. If they can draw a straight line, which most people can, then they can use this technique. I've drawn in my longer term uptrend line, which has started in March 2009, got our higher trough in July 2009, and basically we've been going gangbusters ever since. What I've also done is I've drawn in our longer term downtrend line, which was crossed. This gave us a really great entry signal in July 2009. There was an earlier signal in March 2009, but there's no need to go into that. That was an earlier signal, and quite frankly, we're in a great bull market now, so it really doesn't matter. Next, I've drawn my steeper uptrend line. Now, I've drawn this in because it gives us an early indication of a trend change. So as you can see, it hasn't been able to close below this steeper uptrend line yet. It hasn't been able to close below it at all. And what we'd be looking for an early indication of a trend change would be to close below the steeper uptrend line and then below the previous trough. So whichever trough that might be. In this instance, the trough is at about 4,500 pretty much. So it would really have to close below the uptrend line and then close below 4,500 where the previous trough was. That would give us an early indication, but in all honesty, we've still got our longer term uptrend line here, which is going to give us a lot of support in the future. What I've added as well is, for those who do want I've given you the retracement of the all-time high, which is 67.50, to the low of the 2008 bear market, which is around 3,100 odd. Now, what we've done here is we've given retracements in 75%, 61.8, 50%, 38.2, and 25%. These are a combination of Gann and Fibonacci retracement numbers, and I use both because I think they're both great. I mean, if they both work, why not use them? And, you know, you will find that the market will tend to find resistance at these levels. I mean, you've seen that it's found resistance at 38.2. It then blew it out of the water. So that's why I don't like to use them. I like to use my solid entry and exit signals instead. But our next level is the 50% retracement. It's traditionally a very strong resistance level, and it's coming up at around the 5,000 mark. So expect a fair bit of resistance around that level. You might even see some selling before then as people try to get in early. But at the end of the day, we do have to wait for confirmation. So I'll be waiting for my trend line change, and I hope you will be too, and not jumping the gun. Next, let's look at the Dow Jones. Again, I've just done the simple uptrend line. This is our longer term uptrend line, and this is where we'll be finding the most support at around 9,000, probably 9,100 now. It sort of creeps up, which is another good method of using a good reason why we use trend lines, is because it actually gives you it sort of moves up with the market. So we've always got a trailing stop loss. Fantastic, fantastic way to do it. Next, I've got our longer term downtrend line. This is the only thing that's causing me a little bit of grief in the future. We could be finding some resistance around this level, but you'll find that's our shorter term downtrend line that was crossed in June as well, or May to June this year, 2009. You'll find, now I've done the retracement on the Dow Jones as well, just to sort of compare it. I've got the highest high to the lowest low in the bear market, and here's our 50% retracement level, which is coming up. Now, look at this. This is just the best part about analyzing the market, is when things converge and they all happen at once. These tend to be strong signals if they occur or when they occur. We've got the longer term downtrend line right here at 10,500. We've got the 50% retracement at 10,300. And, oh, well, those are the only two really. But because they're together, it just makes it a little bit stronger and a little bit more stronger of a resistance that might be happening in the future. Again, I don't recommend basing any trades off this support or resistance. At least I personally don't. Some people do, I know, and they have been very successful, but it's not personally how I do things. I wait for confirmation from a trend line change. And as you can see, we'd be looking at the short term, 9,500, long term, 9,100. It would have to close below either of those two for a short term or long term signal. I hope that's helped you on the Dow Jones. Now, lastly, I've already drawn in the trend lines on the Hang Seng. This is the Hang Seng index, and this one we've got our longer term downtrend line, as you can see, but the Hang Seng is pretty much gone way further than either the Dow Jones or the top 200, the ASX top 200. It's well gone past the 50% retracement. If you'd like to have a quick look at that, there we go. Oh, it's actually just past it. How about that? And it's gapped past it as well. So what we might find is that it might actually fill that gap and then continue onwards if it doesn't find resistance there. But at the end of the day, we've got our trend line, and it would have to really cross below the trend line and the previous trough, which is about 19,400. For a bearish signal on the Hang Seng. All of these markets, I have to say, they're in bull trends, so I personally am not taking short positions at the moment. I'm taking all long positions. I'm following the market because 3 out of 4 stocks will actually follow the overall trend of the market, and that actually tips the odds in your favor. And I love it when the odds are in my favor because it means I'm making more money. So that's always a good thing. So anyway, I hope this whole thing has helped you even just a little bit. Please stop by the website at www.asxmarketwatch.com. I've got all the tools that I use here. They're all free, and all it will cost you is your time, basically. So spend a little time, put a little effort in, and learn a few methods of analyzing the market. I promise you it will add to your bottom line if you use them correctly. And so thank you very much for listening. It's been great doing this. I really enjoy this, and hopefully, I really hope to see you next week. All right, bye now.